Congratulations. You've got your business name, you registered your domain name, and you might even have registered a few of the social media platforms that we talked about last week. This week, we're going to talk about finances. Disclaimer, I am not a tax accountant. I am not a tax professional. I am not a lawyer. So everything I'm saying here, take it with a grain of salt. It's worth exactly what you're paying for it. But having been in business for, about 20 years, I have picked up a couple things that, especially for people just starting out, you might benefit from. The most important thing you can do today is to decide to get a bank account, a checking account, and a savings account for your business. Do not, repeat, do not commingle your personal account and your business account. If you're going to the grocery store using a debit card, check, cash, whatever that comes out of your home account, and then you go out and buy a table saw for your business and you want to deduct that on your taxes, you might have some explaining to do. Do not do this. Get a separate account. Absolute must have. In fact, I will say, other than your business name, that's the number 2 most important thing that you can do. I've known people who have not done this. They've operated a business for 5-7 years. Everything goes along just swimmingly. They have no frickin' idea how much money they're making, what their depreciations are, what their deductions are. They don't have an accountant. They're winging a prayer, and something happens, and they have an absolute mess on their hand. Please, please do not do this. Get a separate account. Where do you get this separate account? Banks, credit unions. I'm personally not a super big fan of banks. I had a very bad experience about, 40 years ago, and with the bank, and I've still not forgiven them. I do like credit unions. I've had credit unions, well, I think right after that bad experience with that bank 40 years ago. And yeah, there's been a couple little hiccups here or there, but nothing compared to the bank. If you are a really big business, you have employees, you're moving hundreds of thousands of dollars back and forth, yeah, you really probably should have a bank. In fact, some credit unions don't even do any type of business account. They're purely consumer. Fortunately, mine does, and I've had a very good relationship with. They will not do really big numbers. I forget what the cap is, 500,000 or something like that. I seriously doubt if I'm going to be touching that. But check with where you're banking now. If you are with one of the big national banks, yeah, you might want to even consider moving the personal finances into the credit unions. I think the credit unions are now what banks used to be 50, 100 years ago. No, 100 years ago. Local people knew you by your name. You weren't just a number. Those days are gone. So anyway, wherever you're banking now, talk to them. One thing that might come up is they will ask you to get a DBA, doing business as. And that could be something like Joe Smith's Cabinet Shop. They would accept that as a business name because it's very distinctive. Joe Smith Cabinet Shop. If it's Joe's Cabinet Shop, that's not very distinctive, and so they'll ask you to get a doing business as or a DBA from your courthouse. It's no biggie. You go into the recorder, at least in my state, you go into the recorder, I think it was like $4, and you fill out a piece of paper, and it's just a legal document that says that, I, Joe Smith, am doing business as Franklin County Woodworking, and your signature, your address, so on and so forth. That's all it is. That way the credit union has a legal document that establishes you, the person, with the business entity, Franklin County Cabinet Shop. I changed the name there. What do you need from your bank? You need a checking account. Not many people write checks anymore, but it would not hurt to have 100, kind of a starter pack. There are some things that I still use checks. If I go to an auction, I'll write a check and avoid the, debit card, credit card transaction fee. You will need a debit card, or I would recommend a debit card, and you might consider a credit card. I'm not a big fan of credit cards. I know I just lost some subscribers there. More from personal experience than anything else. I got myself into credit card problems years ago, actually shortly after I opened up. I treated a credit card as a unsecured line of credit, and man, you just wake up one day and there is a really big number with some zeros tacked behind it that you're not really sure how you got there. And then you have to go out and get a really big shovel and dig yourself out. I never, ever, ever, ever want to go back to that. So I don't use a credit card. And there's also been some studies that indicate that if you use a credit card, on average, the average person will spend about 30% more in purchases than if they used cash. If you use a debit card, it averages around 15% more. There's just a psychological, physiological trigger in the back of the brain that whenever you start handing over Mr. Ben Franklin's for something, that activates the pain center, that this is causing some physical pain, seeing Ben go bye-bye. If you hand over your credit card, yeah, go ahead and throw those extra things on there too. Might as well get the whole package. No such activation of the pain center. And the debit card, there's a little tingling sensation, so to speak, in the pain center whenever you do that, because that's coming right out of your account. And if the money's not in the account, the transaction's not even going to go through. So, end of sermon. I recommend, cash, debit card, checks for those who still use checks. What about PayPal? I do have a PayPal account. I do a lot of things online. I sell products online, and PayPal has come in very, very handy. If somebody asks you to build a bookcase and they are under 40, if you send them a PayPal invoice, you'll probably see the transaction go through in that day, if not just hours or even minutes after they receive it. If you send them a invoice in the mail, you're going to be waiting a while. And you might even get an email back from them saying, is it okay if I just drop the cash off to you? Or I can't find my checkbook. Is there any way I can use my credit card? Because a lot of younger people don't use checks. There's very little need to, and some of them just don't have it. I know if you're using PayPal, just like with a debit or credit card, there is a transaction fee. Honestly, I build the transaction fee into my final price anyway. If somebody shows up and pays me cash, wonderful. I got a little bit of a bonus. Otherwise, it's cost of doing business. I just build that right in. And all of my customers pretty much just assume the same thing. They want that convenience. So go ahead and consider PayPal. There's many other systems out there. I'm not familiar with them. I am familiar with PayPal. But some type of online payment transaction, I think, would be a very good idea for you. So what do you need after you have your banking situation set up? You need to check on licenses and permits. Every state is different. Many counties are different, and a lot of cities are different. So you're going to have to just do some research yourself. Hopefully you have been having conversations with your accountant, maybe your lawyer, and you are starting to work these things out. Some places require a business license to do just about anything. Other places don't. Most states are going to require some type of sales permit. If you want to sell something, your state's going to want to collect sales tax on what you just sold. Again, each state's a little different, so you do need to check this. In Indiana, I just applied for a sales tax permit. They gave me a retail merchant's number and entered me into their giant database and set up a payment system for me. I originally started out on a yearly basis because my sales were so very low. They didn't want to mess with me, so every year, January 30th, I have to calculate my sales tax that I have collected from my customers and remit that to the state. Don't get caught in a situation where you've been selling Twidgets for $25 each and you've sold thousands and thousands of Twidgets at $25 each, and come the end of the fiscal year, January 31st, whatever the date is, you suddenly realize you have to come up with 5% of your gross sales to give to the state, or 4.3275%, or in Indiana, it's 7%. You don't want that surprise. So collect that sales tax from your customer the way you're supposed to. So if it's $25 for a widget plus tax, and people pay tax. In one way, it almost says that you're serious about business, that you're doing everything correctly, and can kind of, I think, help your reputation, as opposed to the guy, no, I never worry about sales tax. Not really a good look. If you are doing something, let's say at a craft fair or something like that, where it just gets really awkward, handling the tax, either build the sales tax number into your price or kind of round up. If it's $25 a Twidget, you can do $26 for a Twidget. That includes the sales tax, and people are fine with that. That's kind of a nice, neat, clean way of doing it. But don't ignore this. States want their sales tax. Again, I am not an expert or a tax attorney or anything else, but you need to find out all the rules and regulations where you're operating. In Indiana, if I ship a product out of state, I do not have to collect sales tax. If I have sales over $100,000, I do have to collect sales tax. This gets into Nexus. Nexus is this really complicated legal tax authority quagmire that if a company has Nexus or a presence in a state, then they are obligated to follow that state's tax laws. And there's horror stories about this. If you've noticed, whatever state you're in, except maybe Tennessee, if you buy something from Amazon, you're paying sales tax. Why? Because they've established that Amazon has Nexus or a presence in every single state in the union, and they have to abide by every single state. Some people say that we're going to go to a national sales tax thing and just wipe out all the smoke and mirrors. I have no idea, but right now, since my numbers are unimpressive according to the sales tax people, I'm not complaining. I don't have to worry about out-of-state sales. that may change. What about a business license? Some, particularly cities, may require a business license no matter what type of business you're doing. Sometimes I think they just do this to be nosy. Maybe they're trying to regulate something. I'm not sure. But again, you have to check with your own locale and figure out what the regulations are. While you're at it, you might as well go ahead and apply for your FIN number, or your Federal Employee Identification Number. This is on the national stage, the federal government, and if you go to, I believe it's the irs.gov, and you type in, FEIN, it will come up, and honestly, it's a super simple process. I filled out a form, my name, business name, location, so on and so forth, and boom, they fired me off a Federal Employee Identification Number, and it comes in very, very handy when you're filling out some of these other forms. It also gets into paying your federal tax. You can use the FIN as opposed to your Social Security, depending on how you're filing taxes. Okay, next thing on the list is insurance. Again, I am not an insurance agent. I am in no ways qualified to give advice as to insurance practices, so take what I say with a grain of salt. It's probably a very good idea for you to get some type of business insurance. If you are working in people's homes, you most definitely want to have a general liability insurance policy. Now, these things are not horribly expensive. I haven't checked lately, but a year's policy, $600-$700. I'm quite sure with the state of the world, that number is going to go up. But the first step would probably be to contact your homeowner's insurance or your renter's insurance. Whatever type of insurance you have, talk to them. A lot of companies could underwrite your business on top of your homeowner's insurance, kind of a piggyback thing. Other companies want nothing to do with that. Some companies might even exclude that. So you need to check with your insurance carrier first. If that goes well, then start shopping for general liability insurance. And there's a lot of companies out there. There's also some internet companies that look very, very promising. You need to figure out your scope of work. That's one of the first things the insurance company is going to ask you is what type of work you do. If you are a custom woodworker who does all kinds of complicated electrical installations, your insurance is going to be higher than someone who builds kitchen cabinets. If you build kitchen cabinets, but someone else installs them in a customer's home, your insurance is going to be different. If you are totally 100% shop-based, you never leave the shop, you never go to a client's home, that's a different situation than if you are doing 90% of all of your work at a client's home. So that's different. Maybe you're only doing like art and craft shows. Most art and craft shows will require some type of proof of insurance. And that can be very, very cheap because typically it's very low risk, it's infrequent, so on and so forth. You can get policies like that. The last time I checked was around $400 or $500. If you are building children's products, God help you, that can get really, really dicey. And personally, I don't do children's products. Don't want the hassle, don't want the headache. There's a whole ton of government regulation that you could be following, everything right down to the final letter, and you still get it wrong. So if that's an area that you're going into, tread carefully. And if you have anything to do with the word boat, you will be treated differently by the insurance companies. If you are making model boats, I'm quite sure that would freak out some insurance underwriter. They are just really, really weird about boats. So just kind of a heads up there. You could be in a different situation. I would recommend doing a search and start talking to insurance brokers. I mean, they have the answers, and they will be able to guide you, starting with your personal homeowners. They're going to want an annual revenue estimate. Since you're just starting out, you have no idea. But just to your best guess, I'm going to make $10,000, $20,000, $50,000, $100,000, whatever it is. That's a number that you're going to have to run with. And each year, then they go through and they do a reevaluation. Now, I'm also assuming that you don't have employees. If you have employees, that is a totally different game. That gets into workman's comp, so on and so forth. I don't play that game. I don't want to play that game. If you do, you seek advice from somebody much more knowledgeable than I am about this. Most of the general liability policies that I've had are $1 million coverage, very typical, and read through and figure out what they include and what they exclude. Very important. Read that policy. If you don't understand a policy, find somebody who can read it and explain it to you. It's very, very important that you know what would happen in a certain situation. And remember, if it's not written down, it never happened. So if an insurance agent or someone could tell you something, but ask them to show you in the policy where that's stated. Vehicles. If you are using your personal vehicle for business, there are tax deductions for that. Check with your current auto insurance provider to see if they have a problem with that. Sometimes they do, sometimes they don't. My insurance advisor told me that as long as I don't advertise my business on my vehicle, they are perfectly fine with me using my personal vehicle for business as far as insurance purposes. If I put my name on the side of the vehicle or do a wrap, then I'm going to need to switch the policy into a commercial vehicle policy. Another thing that I learned about the insurance industry is that I call it an insurance racket. I mean ratchet. If you're paying $500 this year for your annual premiums, next year it goes to $550. Then it goes to $600 the third year, and then $675 the fourth year. And there's a hurricane down on the Gulf Coast, and now it's up to $800 a year. And you've had absolutely no claims. You haven't even talked to the insurance company, but this keeps going up and up and up and up. I don't know this for a fact, but just from experience, I think what happens is kind of the concept of letting sleeping dogs lie. If you don't stir the pot or kick the dog just keeps on sleeping, and your insurance premiums go up every year. I think it's a very good idea to shop your insurance at least every 3 years. It might not hurt every 2 years, because it seems, again, I'm not in the insurance industry. Maybe some of you folks are. You could enlighten me. But it seems like if you're not questioning them, the premiums just kind of go up. And I also think that Company B wants your business, so they will give you a lower insurance rate to get you on board so they can start ratcheting you up, at which case you go to insurance C, so on and so forth. I certainly don't know that for a fact, just kind of observation, but there might be something to it. Your insurance company may also require some type of license, depending on where you are and specifically what you're doing. So again, you need to check that. And finally, your homeowners association. They may have some requirements as far as insurance. I don't know. I've never been part of an HOA. I only hear the horror stories. So again, check with them. So insurance, it really boils down to your decision. And hopefully you have been in consultation with your pro team, your lawyers, your accountants, tax advisors, so on and so forth, those pros, and they have given you good advice. Finally, let's jump into taxes. Everyone's favorite subject. Yeah, it's not too early to think about this. Again, I am not a tax accountant or a professional, so grain of salt. When you open your business, there are 3 main taxes you're going to need to worry about. The first is your federal, then your state, and your local. So let's start off with your federal. We've already talked a little bit about this earlier. I would really recommend you start working on taxes right away, because as soon as you get the framework in place, I think it's easier to do your taxes when it comes tax time. And again, if you're using a tax professional, talk to them about this. Okay, so let's talk about your federal income tax. Each year, April 15th or thereabouts, you will need to submit typically a 1040 federal income tax form. This is where you will include your business income. If you have a household income of $50,000, you earned $10,000 from your side hustle, then you will add that into your total household income of $60,000. How do we do this? That's where the Schedule C comes in. The Schedule C is basically your business tax return, and it will go through and you include, all of your revenue, the money that you've taken in. You go through all of your expenses. And this is why I really kind of recommend you get ahead of this instead of trying to figure this out, 3 hours before the tax deadline. Your materials are tax deductible, your machinery is tax deductible, so on and so forth. That all goes on to the Schedule C. Now, if you've made a profit for the year, then that goes on to your taxes as an income. If you've lost money in your business, that goes on your tax form. So it's actually going to show up as a negative number, and it's going to reduce your overall household income. Again, you need to talk to your tax professional about this. But by getting all of these deductions and things like this lined up early means that there's not a panic moment, on April 14th. Some things that you may overlook if you've never done this before, or if you're not talking to a tax professional, but make sure you're taking all of the deductions that you're entitled to. Give to Rome what is Rome's. You can deduct the workspace that you're working out of. In my case, I work out of an attached garage. That's part of my home, but I can deduct that square footage from my overall home. I also get to deduct my household utilities, the electric, the gas, the internet, so on and so forth. Water, all the utilities. I get to deduct a percentage according to the percentage of my shop compared to the house. Most people will totally overlook that. If I do a home repair, let's say I have to put in a new HVAC system, again, part of the business can claim that as a deduction. Depreciation of the home, that comes into the tax equation. Improvements that I make, all of these things you need to be keeping track of, because it's really, really important when it comes tax time. Again, talk to your tax professional. Oh, one little caveat when you are talking to your tax professional, keep in mind what their job is. Their job is not to go to jail. If they give you advice that turns out really bad, and it turns out really bad for you, it will probably turn out really bad for them, and they don't want that to happen. So they're going to be pretty darn sure of exactly what they tell you is going to be the safest route. Their job is not really to save you money on your taxes. Some tax preparers are, nope, that gets a little gray area. We're not going to do that. Other tax preparers are, oh yes, I've had many clients who have handled this in this way, and we've never had a problem. The feds have said this is perfectly fine. So it kind of depends on who you're using, to give you tax advice. Just be aware that a tax preparer's number one duty is to themselves, and you're kind of, lower on the totem pole, so to speak. Another tax that you're going to pay, okay, it's not technically a tax, but it's the FICA, the Federal Income something. It's the Social Security payment, withholdings. It kind of depends how you look at it. A tax, but if you're working a day job as an employee, a W-2 employee, your company is paying 7.5% of your Social Security. You're paying 7.5% of the Social Security, which comes up to 15%. If you are self-employed, sole proprietor, guess who's paying that 15%? Yep, you are. Buckle up, bucko. And it's right there on the tax form, and it's super simple to do. It's you'd have to work very hard to kind of miss this, but please don't miss this. Your state taxes are going to vary according to your state. Typically, you're paying an income tax, you're paying a sales tax, which we talked about earlier. Also on your sales tax, there are a lot of things that you can not pay sales tax when you buy them. So if you're buying a load of lumber that you are going to use to turn into a product, you don't have to pay sales tax on that, or at least in my state, I don't have to pay sales tax on that. When I sell that product, I have to collect sales tax. Now, if you're doing things like built-in bookcases and cabinets and things like that, it gets a little grayish. And typically, if you're going to a lumber yard, don't screw with a tax exemption. Pay the sales tax at the lumber yard, take it to the customer's home, and install it. It's kind of that construction clause, and it gets into really murky waters. Don't give anybody any reason to accuse you of not doing things the way you should be doing. And if you're cheating on your taxes, well, boo on you. Again, talk to your tax professional. Local taxes, who knows? In Indiana, we have to pay a property tax on your business property, which really isn't a separate property, but it gets really confusing. There is a kind of a threshold for that to kick in, and you may be over that threshold, you may not. Different states are different. Again, talk to your tax professional. Speaking of, where exactly do you find these tax professionals? How do you do your taxes now? That's a really good place to start. If you are using an agency, an accounting firm to do your taxes, by all means talk to them. If you're going to, like the pop-up preparers, H&R Block, Jackson Hewitt, those folks, they're not really into business. That's not really their expertise. They're just trying to get 20,000 people a night processed so that they're not late on their taxes. They don't have the time to really dig into these things. There's a thing called an enrolled agent. This is a person who typically has a lot of experience with taxes, and they have to go through a test and an interview process and so on and so forth, and they get certified as an enrolled agent. It means that they can speak for you in tax court if you are unfortunate enough to show up there. Accountants, many of them will do taxes. Some of them want nothing to do with taxes. They are off into a totally different realm of their business. Certified public accountants, CPAs, they're probably going to do taxes for people a lot bigger than we are. They need to see a whole bunch of zeros, after that revenue column. There are tax lawyers / accountants that do taxes, and there's online taxes. TurboTax is probably one of the biggest one. There's Tax Act. There's H&R Block. You can go to the federal government and file your taxes right on the government website, unless you have a business, and then you can't do that. You're going to have to find some alternative methods. Or you can be a DIYer. You can get out your pencil, get out your paper, get that tax form, that 1040, get the instruction manuals. You'll probably get all of this online now, and you can go for it. More power to you. I did that for years and years and years and years, and finally went to an enrolled agent, and she found money that I had no idea I was eligible for. She easily paid for her services in the money that she pointed out I was actually eligible for, but in my ignorance was not claiming when I was doing it by myself. Anytime I would take my taxes to my enrolled agent, I would have kind of done them myself, not dotting every T, crossing every I, but I have a really good idea of where I stand with taxes, and then she does an excellent job and comes back and is like, wow, I would have lost X number of dollars had I done this myself. Thank you very much. And I started using TurboTax to do that instead of the manual method, and each year for probably the last 7 or 8 years, the difference between what TurboTax comes up with and what she comes up with has been getting narrower and narrow. And for, I think, the last 2 years now, I have been using TurboTax, and I've been happy with the result. I know there's pros and cons of that. Again, these are your decisions, and you can make your own decisions. Good luck with it. So with that, I think we are going to wrap up this episode. I know it's not the most fun subject when we're talking about working at woodworking. It's really, really necessary. And again, get that bank account, the checking account, savings account in the business name. Super, super important. Make sure you have all the license and permits that you need in your locale. Talk to your insurance agent. See where you stand there. Listen to their recommendations. Shop around. Make sure you're protected. The very last thing you want to do is to go into a customer's house and you've just made this beautiful, large slab dining table for them, and they wanted an oil finish, and you were laying down, a coat of oil and wiping it off, and another coat of oil and wiping it off, and you got a phone call and you took those rags and you kind of wadded them up and you just dropped them into the trash along with some other things as you were trying to tidy up and talk on the phone at the same time, and you just weren't thinking about anything, and 3 hours later you hear fire engine racing into the neighborhood, and you just get that sinking feeling. Oh my gosh, what'd I do with the oily rags? Yeah, they spontaneously combusted in the trash can. Nobody was home. It burnt down the kitchen, the dining room where your nice slab coffee table was, and their insurance company wants to know who you're insured with. A, be extraordinarily careful with oil finishes. B, you better have your insurance in place. So, taxes, again, talk to the professionals. Get that set up early. Don't wait for this. It will make life much easier when April comes around. And finally, I've turned away like 4 jobs this week so far. I had 1 text, I had 2 emails, and a phone call. And I'm just swamped. I can't do any more work any faster. So again, encouraging you, if this is something that you've been thinking about for a long time, the work is out there. And let me just leave you with this. You're sitting there thinking, oh my gosh, how will I ever get customers to do the work, to earn the money, to support myself? That is 100% wrong in most cases. You are going to have more business than you can handle. Maybe not the first week, maybe not the first month, but I can pretty much guarantee after the first year, if you're in a location of any population size at all, you're going to have more work than you know what to do with. And we'll talk about that in a future podcast. But there you go. I hope you're thinking about jumping into this. Until next episode, happy woodworking.